Here are 3 tax hacks to help you grow your wealth through real estate. Number 1 is you get to claim your expenses and deduct it from your taxable income. So what does that mean? So things like mortgage interest, property taxes, maintenance costs, the mower man, the gardener, all of those sorts of things become expenses to your rental property. So you can claim them against your income and use them to reduce your tax. Number 2 is depreciation, which is like what we just talked about, but on steroids. So depreciation is an accounting concept that refers to the reduction in value of something over time due to wear and tear, age, use, obsolescence, and it can be used as a tax deduction. So even though you actually technically haven't lost money, you haven't paid anyone at that exact time, you still get to use it as a tax deduction. So I'll give you an example. If you install an air conditioner at your rental property, and let's say that air conditioner costs you $500 to install. Now, one of the big things with depreciation is you need to know what the useful life of whatever you've installed is. So let's say an air conditioner, the useful life is 5 years, which useful life literally means how long will it be useful. So if its useful life is 5 years and it cost you $500, well, $500 divided by 5 years is $100. So you can claim a $100 depreciation loss each year for the next 5 years, even though the air conditioner is still running just fine. Now, you may well have to replace that air conditioner in 5 years, which is the whole intention of depreciation. But the point is, over those 5 years, you didn't actually lose any money, but you still get to claim that as a loss. And to use a bigger example, if we use the actual house itself, now, what's its useful life? Well, different countries determine it different ways. In the US, I believe it's 27.5 years. Well, after 27.5 years, you've been able to depreciate the entire house. But do you still have a house? Yes, you do. So you've been able to claim that as a loss, that entire value of that property over 27.5 years, and you still have a property at the end of it. You probably need to renovate it, sure, but you've been claiming those losses and reducing your tax all the way over that period, which has given you more disposable income, more money to invest, and to continue growing your asset column over that time, even though you haven't experienced the real loss itself. And third, and the most powerful, is equity. Growing wealth tax-free using equity. First of all, what is equity? Equity is the difference between the value of something and what is owed on it. So if you have a property worth $200,000 and you owe $160,000, which would be an 80% mortgage, then your equity is the difference between those two numbers. So in that case, it's $40,000. So when that property goes up in value over time, let's say it's now gone up to $300,000 in value. Well, your equity is $300,000 minus the $160,000 mortgage. It's the difference. So you now have $140,000 equity. Now, do you pay tax on that? No, you don't, because it's equity. You only pay tax when you sell the property. And now this is one of the really, really powerful things about real estate is you can actually borrow against that. Most other assets that you own, you need to sell in order to access that profit to reinvest it. What happens when you sell? You pay tax. So you might make $140,000, but then you might need to pay $25,000, $30,000, $40,000 in tax, which you need to give away, and you only have the balance left over to reinvest. Whereas in real estate, we can borrow against that equity and reinvest it to buy shares, another property, whatever it might be. But the point is, we got to take the full amount and reinvest it. When you do the math on that over a 5, 10, 20, 30-year period, that makes a huge difference, exponential difference to your results over that period. So this is what we talk about growing wealth tax-free in real estate. That's how the wealthy do it. And if you do what the wealthy do, you will get what the wealthy get. I hope that's been of value. If you've got any questions, if you had any aha moments, pop it into the comments. If you've done this already yourself, share your results. Don't forget to subscribe, like the video, and I'll see you next time. Invest safely.